Welcome to the October 13th, 2018 edition of the BitcoinNews.com Daily Podcast. We cover the biggest stories in Bitcoin, blockchain, and cryptocurrency every single day. You can count on us being here. This is your host, Space Marine. Jumping right into the market analysis. Bitcoin has been stable over the past day, sitting around 6,200, maybe as high as 6,210 and as low as 6,170 on Bitstamp. And it's interesting, we've been using Bitfinex data throughout this entire show so far, that's maybe 70 episodes now, 70 days. So, on Bitfinex, the price of Bitcoin is actually over $100 higher than it is on Bitstamp and Coinbase, and so Bitfinex halted their fiat withdrawals. So I'm not going to use Bitfinex anymore because, well, they halted their fiat deposits, and maybe the withdrawals are halted too, or people are at least scared the withdrawals are halted. So people are buying up a lot of Bitcoin on Bitfinex and withdrawing the Bitcoin. Bitfinex is not insolvent. They have one of the biggest Bitcoin wallets, but it's emptying during this situation, but it's still one of the biggest. But the lack of fiat functionality is causing the price of Bitcoin on Bitfinex to rise a lot more compared to the global average. We'll keep you updated on that situation since Bitfinex is the largest USD to Bitcoin exchange in the world, and it's very important what goes on with Bitfinex. Jumping right into our first story, we talked about how One Broker, which is a platform based in the Marshall Islands, which is a sovereign nation. It used to be part of the United States, but it was its own nation for decades now. So it's based in the Marshall Islands, but it got shut down by the United States. The Securities and Exchange Commission, the Commodity Futures Trading Commission, and the Federal Bureau of Investigation teamed up to shut down One Broker, basing an undercover agent from the FBI. So he signed up with just an email address and a username, and he bought some of these things on One Broker, and then they used that to shut down One Broker because they basically proved that One Broker was selling within the United States, and they should not be because they weren't registered with the Securities and Exchange Commission pretty much. They had to be registered as a securities broker or broker-dealer or something like that, which is extremely hard to get. Even Coinbase had to buy out a couple companies to get that license. They couldn't just get granted that license themselves, and Coinbase is the biggest Bitcoin exchange headquartered in the United States. So One Broker had no chance of getting it. And One Broker started in 2012. So they were using, back in 2012, it was a fairly anonymous scene, and people preferred to be anonymous when doing Bitcoin stuff, just because that's the nature of the crypto space. It's built in anonymity. That's one of the main principles. So One Broker continued to do that policy even after the laws were instituted in the United States, because those laws were not instituted in the Marshall Islands as far as I know. But they also probably like the United States business. A lot of the business for Bitcoin and crypto comes out of the United States and the English-speaking world. So they continue selling in the United States, even though they put on their website a disclaimer you should not buy if your local laws say you can't buy it. But people were buying it anyways, and that's actually against the law. You can't just put a disclaimer on. You got to literally shut down the IP. There's sites I've seen some of the new initial coin offerings. They ban IPs in the United States. That's what One Broker should have done at the least. Beyond that, they probably should have had know your customer anti-money laundering policies, which would make it not anonymous. That collects identification information in depth, so it prevents money laundering and terrorism and such. I don't necessarily agree with these policies, but these are the laws. If you want to deal in the United States, you need AML, KYC, and registration with the Securities and Exchange Commission to sell things like One Broker was selling. So they got shut down. It was a really bad situation because these customers are anonymous, but then One Broker shut down. All their funds were seized by the United States. And the United States could have potentially said, we want identification information from all the people before we give the money back to each one of them. So, I think a lot of people would have been okay, I'm not giving my identity, this is a loss of funds, and that would have been really bad. That's the opposite of what the Securities and Exchange Commission's mission is, to protect investors. There's up to 50,000 users on One Broker, and they all could have got burned, but now it really took a turn for the good. Apparently, One Broker has started processing withdrawals, so that's a really miracle. Maybe the Marshall Islands, actually had to do with that because they're a sovereign nation, and maybe they talked to the United States and said, hey, you're way overstepping your bounds. You shut down our top crypto platform, and then now you're going to hurt all our customers too. So maybe it had something to do with international negotiations, because this is a real miracle that One Broker is able to refund its customers. So just to recap, One Broker was shut down by the SEC, CFTC, and FBI, but now they are processing withdrawals. So that's really good, and that saves up to 50,000 people from extreme hardship of losing all their funds, and that would be opposite of the SEC's goal. Now for our next story. We have a couple of stories about Coinbase today, which is the biggest Bitcoin exchange headquartered in the United States. First off, Coinbase has listed 0x, which is a decentralized platform for trading cryptocurrency using the Ethereum blockchain. And 0x has its own native cryptocurrency, which is what's being listed on Coinbase now. So 0x is the first ERC20 token to be listed on Coinbase. And ERC20 is a protocol on Ethereum, which makes it really easy to launch a cryptocurrency. It takes like a few parameters being set and then a click of a button, and anyone can make their own cryptocurrency with ERC20. And there's been probably like hundreds or thousands of cryptocurrencies, probably thousands created with ERC20. And actually some of these, like I listed them in the article I wrote about this, some of these are the top cryptocurrencies in the world. Like for example, Binance Coin, Maker, DAO, Omisco, Eternity, Basic Attention Token, BAT, Golem, Hollow, Augur, Status, Populous, Walton Chain, and Chainlink. Those are all ERC20 tokens with greater than $100 million market caps, USD. And there's many more besides that with lower market caps that are still quite popular and significant. So this is groundbreaking that Coinbase has listed an ERC20 token, because now that they've listed 0x, that's the same backbone technology for all the other ERC20 tokens. So it's literally like probably a few clicks of a button and a few lines of code to add the rest of the ERC20 tokens, as many as they want, to Coinbase. And they might be. They're probably like dipping their toes into it, seeing how this is going to go for a little while. And then they're probably going to add a bunch more ERC20 tokens like the ones I listed that are over $100 million market caps. Before this, Coinbase only had Bitcoin, Bitcoin Cash, Ethereum, Ethereum Classic, and Litecoin. That's only 5 cryptocurrencies out of thousands in the world. But Coinbase announced previous to this that they were going to start adding all the cryptocurrencies. They opened up an application process where people can like suggest a cryptocurrency to be added and present some information why it should be added. And they're saying they're going to add all the possible cryptocurrencies that are popular enough, safe enough, and legal in each jurisdiction too. Like Coinbase has many countries that they're in. Like I know they're in the United Kingdom, they're in the United States. I don't recall exactly right now where else they are, but they're becoming global. I think they're going into Japan too eventually. So based on the country, they're going to add cryptocurrencies by their legality. Like in the United States, a lot of initial coin offering tokens. And by the way, Coinbase has a broker-dealer license because they acquired a company that has one. So they're able to offer securities, like ICOs, which are considered securities in the United States. So they're going to be adding as many cryptos as possible. And it just started. Now they have 6 cryptos. They have 0x now on top of the 5 original ones that they had. And this could be a huge thing because, for example, 0x went from 51 cents to 77 cents. And they announced that they were going to add 0x a bit before this. And so it was at 51 cents in the middle of September. Now it's at 77 cents. That's a 50% rally. So adding a coin to Coinbase is a big deal for that crypto because it makes it available to like everyone in the United States. Coinbase is the go-to place in the United States, a country of 300 million people, the most wealthy country in the world. It's the go-to place to buy cryptocurrency for like average people, pretty much. So when a crypto gets added to Coinbase, it massively adds to its demand and user base. And so this could be happening throughout the crypto space. Coinbase is very likely going to be adding more coins in the coming months, and especially the coming year. They're going to add a ton of coins probably. And each crypto that gets added is going to have a big rally. And so I think the overall crypto market cap is going to go up as Coinbase does this process of adding coins. And it just began with 0x, so that's really exciting news. And good news for the crypto markets. Like a 50% rally is a big deal. So people can like start investing in these ERC20 tokens. I'm not trying to give investment advice, but that they could probably expect that it'll get added to Coinbase if it's major enough, like Cardano, for example. Coinbase mentioned Cardano previously. So like if you buy one of these before it's announced it's going to be listed, there could be like 50 or 100% profits. So it's a big deal. That's a lot of profits in this bear market that we've had in 2018. Another story about Coinbase. Coinbase Index Fund has been shut down, or it's going to be shut down really soon. And so the Coinbase Index is Coinbase's version of a crypto index fund. And this is targeted at accredited institutional investors. I believe you need like $1 million in a bank account set aside just for investing to be considered accredited. So they only let accredited investors buy this Coinbase Index, and that really limits the amount of people that could buy it. Like, there's even a lot of wealthy people that aren't accredited. Every average person couldn't buy the Coinbase Index, and all the wealthy people, a lot of wealthy people couldn't buy it. Only the very richest people that care about investing a lot could buy it. And then the minimum investment was $250,000. So, since the minimum investment is $250,000, even accredited investors, because like accredited investors only have like $1 million minimum for investments. $250,000 is a lot of that. And it's asking too much, probably. Like, people want to dip their toes. They'll be like, okay, I'm buying 10,000. Even if someone's super wealthy, they'll be like, I want to buy 10,000 and play with it a little. They don't want to buy 250,000 to start. So this Coinbase index did not get enough interest. It did not make enough money, and now they're taking the resources dedicated to the Coinbase index team and putting it elsewhere. And we're going to discuss that more. Some other problems with the Coinbase index. It was a weighted average of the cryptocurrencies on Coinbase, which was 5 previously. It's going to be 6 now, but the Coinbase index is going to be gone. So there was 5 cryptos in the Coinbase index, and every month the weighted average changed according to the market caps of each crypto. However, this doesn't really give investors the ability to optimize their investment. If someone's investing $250,000, they probably want to optimize. They're like, okay, I want to have more Bitcoin than anything else. Or like Ethereum's going to go up, I'm going to buy some more Ethereum. By the way, Ethereum went down a lot. That's another point. So if one of the cryptos goes down a lot, like Ethereum did during 2018, then anyone who owns this Coinbase index, even if the other cryptos were stable or went up a bit, Ethereum took away all the profits from that. I think all the cryptos went down, basically. So like if these investors are like, okay, I'm not buying anything. The whole crypto market's going down. But let's say crypto was going up a little bit, Ethereum went down a lot. The way this Coinbase index works, it would like really screw the investors and they wouldn't get any money at all. So it's not really optimal. I think investors that are putting like $250,000 or more would want control of their investment to like buy and sell each and every day the crypto that they want to optimize the portfolio. Also, the Coinbase index was backed by cryptocurrency, but it's certainly like you cannot withdraw that cryptocurrency. You cannot send it. You can be like, okay, I have $1 million in the Coinbase index. I own this much Bitcoin. They go to Coinbase. I want to like, send the Bitcoin somewhere. I want to buy something. You can't do that with the Coinbase index. You have to like divest into fiat and then buy Bitcoin if you want to use Bitcoin. So that doesn't really make sense. So what Coinbase has started doing is they're offering the Coinbase bundle now instead of this, and it's so much more optimal. The Coinbase bundle has a minimum investment of $25. You don't need to be accredited. You can be anyone with $25. And you can buy the bundle of all the cryptos on Coinbase. And then people have the freedom to buy, sell, and send the cryptos individually as they wish. That's the way it should be. There's no reason with a digital asset like cryptocurrency that an index would be needed. Like indexes are really good with the stock market. But with cryptocurrency, like there's the Dow Jones Industrial Average, the S&P 500, the NASDAQ. But with cryptocurrency, it's a digital asset on the computer. There's no reason not to own the actual asset on the computer. There's no reason for an index, really. Like, they were trying to style this after, like, the S&P 500, but the S&P 500 for crypto. And they thought institutional investors would like this because the institutional investor wouldn't have to touch the crypto at all. They just put their fiat in. They take the fiat out when they make money or lose money. But reality is people do want to hold the assets if it's, like, digital like this. So the Coinbase bundles is a lot better. It's, like, $25 minimum. And so people could dip their toes in and then put a lot more in if they like it. They could play around with it. Or they could even just go on Coinbase and buy each crypto individually. Coinbase bundle is just like pretty much an aggregation of that. It's not much different. So this is like a good case example of why crypto indexes are inferior to just holding and buying crypto itself. And I think institutional investors are going to want to hold crypto and not an index. There are other indexes that might still be existing from hedge funds and stuff, but I don't think investors want to buy indexes versus actual crypto. Now for our final story of the day. We talked about how Yale had invested in crypto hedge funds. They invested in Paradigm and A16Z, which was Andreessen Horowitz. But now 5 other major universities with huge endowments. Like Yale has a $30 billion endowment, but now Harvard University is investing in crypto. They have a $36 billion endowment. That's the biggest endowment in the world, I believe. It's definitely the biggest in the United States. The Massachusetts Institute of Technology has also invested in crypto, and they have an endowment of $15 billion. And Stanford University invested in crypto hedge funds now. They have an endowment of $25 billion. The University of North Carolina invested in crypto. They have an endowment of $3 billion. So we got like huge endowments from major universities investing in crypto hedge funds now, which probably involves investing in actual crypto assets as well as investing in companies involved with crypto and blockchain companies. That's what the hedge funds do. They diversify beyond just crypto assets, but they put most of the money into the actual crypto, but then they also invest in companies and startups for equity and stuff. And these endowments from Harvard, MIT, Stanford, Dartmouth, and the University of North Carolina, and Yale, that's 6 of them now, these can each be considered institutional investors for sure. They're institutions that invest. That's the definition, I would believe. And all of them have endowments in excess of $1 billion, well in excess of that. And so we talked about with Yale, David Swenson runs Yale's $30 billion endowment, and his choices are copied by institutional investors worldwide, and lo and behold, 5 universities that are major copied his decision right after he did it. And so now all of these universities are invested in crypto. Crypto's price has not gone up, though. The Bitfinex troubles that have been occurring have actually caused crypto prices to go down. So, but there is a good effect here. If they start making money on these hedge funds, crypto hedge funds, strategy, and eventually all institutional investors will make this part of the strategy. And if we could just get institutional investors overall in the world to put 1% of their money into crypto, it would go up like an order of magnitude 1,000%. So this might be the beginning of that, and it's really good news that we're seeing universities with huge endowments over $1 billion. One of them's $36 billion. They're starting to dip some of that into crypto. That's a big deal. The Bitcoin market cap's only right now about $110 billion. These endowments, like collectively, is like almost that much. So if they start investing a lot into crypto, it is going to affect Bitcoin's price and the overall crypto space price, because they're probably investing in multiple cryptos. Although most institutional investors, it seems like predominantly they want to buy Bitcoin, because Bitcoin's the king of crypto. It has the best reputation. It's the most widely used. It has the most infrastructure. So Bitcoin seems to be leading the pack as always. For example, its market cap is $110 billion, and Ethereum's at $20 billion at second place. So Bitcoin's far and away the best. But the point of this story is that we now have 6 top universities with huge endowments investing in crypto. This could be the beginning of the institutional investment wave that many experts have been calling for, which could cause the big crypto rally in the future. Now that we have this infrastructure of hedge funds and crypto custodians, and now we have the institutional investors, which is the missing link to making the huge rally. That's all we have for you today on this October 13th, 2018 edition of the BitcoinNews.com Daily Podcast. Come back tomorrow for another great episode. Go to BitcoinNews.com 24/7 for the full spectrum of blockchain, Bitcoin, and crypto analysis. This is your host, Space Marine, signing out, going back on my spaceship.